You were taught to invest in the market, trust the index, and wait for rewards. But what if that very belief is dragging you toward destruction? In a world where one headline can erase half your wealth, the old playbook has become gasoline on the fire. The S&P 500 is not a god. Growth is no longer enough, and survival is now the ultimate success. This is not the time to hope the market will be fine. This is the time to armor up. If you don't change your strategy, don't ask why your portfolio burns, because this video will shatter your investment illusions. And now comes the full truth no one else dares to tell you. The collapse of public investment faith. People are taught that investing is simple. Just put your money in the market and wait. But that era is over. Today's market isn't a wealth machine, it's a battlefield where blind trust is slaughtered. Inflation isn't a shock anymore, it's a persistent threat. Interest rates aren't a backdrop, they're a trapdoor. If you're still playing by the old rules, you're not investing. You're walking into financial warfare without a shield, hoping the bullets will miss you. That's not strategy, it's delusion. This isn't about making gains anymore. It's about staying alive. In a world where one headline can crash a global index, passive investing becomes an act of reckless hope. The S&P 500 used to be sacred. Now it's just a legacy brand people cling to. The question isn't how to double your money. The question is how to protect what took you decades to build. In this game, survival is the new success. And most aren't ready for that truth. This lesson isn't new, it's just ignored. People work hard, save up, invest the way they were told, and watch their net worth vanish in months. Their mistake wasn't greed, it was obedience. They trusted a one-way model with no backup, no shield, no alternative. They didn't need to beat the market, they just needed stability. But no one teaches defense, they only preach growth. And that silence is what destroys people. This video exists to break that silence and expose what really matters. Old rules don't work in a new world. Believing that just invest in the index and wait still works is like using a rotary phone in a digital warzone. That idea was born in an age of low inflation, predictable interest, and economic stability. But now, inflation is loose, interest rates are erratic, and any single event, from a geopolitical crisis to a stupid viral tweet, can burn down 10 years of savings in a week. This isn't a temporary glitch. This is the new battlefield of money. Yet millions still cling to outdated strategies like scripture. They follow the S&P 500 as if it's divine truth, ignoring the fact that they're navigating 2025 using a map from 1985. It's not smart investing, it's faith-based gambling. The brutal truth is this: what used to be stability is now fragility. And the longer you hold on to that illusion, the more exposed you are. Familiar doesn't mean safe, and tradition won't save you when the tide turns. Why isn't this shouted from every rooftop? Because the market industry thrives on hope. It sugarcoats risk, dresses up volatility, and sells you optimism in a fancy chart. But reality doesn't care about your comfort. You're living in an era where volatility is the default setting. If you don't adapt, you drown. Following the crowd is no longer strategy, it's surrender. The old rules don't work here, and the price of denial is everything you've built. The S&P 500 myth, icon or double-edged sword. The S&P 500 is praised like gospel, but under the hood, it's dangerously concentrated. A handful of giant tech companies now control a massive chunk of its value. If one falters, the ripple wrecks your entire portfolio. Investors worship it not because it's smart, but because it's familiar. It feels safe. But in truth, that comfort is a trap. It's nostalgia disguised as strategy, and it's dragging people into disaster without them even realizing it. This isn't investing, it's blind faith. Generations have been told to trust the index, and any voice of skepticism is labeled heresy. But let's get real. The economy today isn't what it was 20 or 30 years ago. Refusing to question your tools in a changing battlefield isn't loyalty, it's suicide. What used to be reliable can now be lethal, and the market won't wait for you to catch up. Let's be clear, the S&P 500 is not evil, but treating it as the ultimate solution is lazy and dangerous. It's a growth tool, not a financial shield. Depending on it without challenge is like driving without a seatbelt because it worked last time. In volatile times, easy strategies often carry the highest risks, and those who refuse to rethink them will be the first to fall when the next storm hits. The new rule: Stop predicting, start protecting. The market doesn't care how disciplined you are or how many books you've read. It only asks one question: are you ready to bleed when things go wrong? If not, it'll devour you. That's why the smartest investors today have shifted focus. Forget chasing returns. Focus on protection. Not because you're weak, but because the world is cruel. In chaotic times, it's not about beating the market. It's about staying in the game without being broken. This shift is not weakness, it's wisdom. The all-weather strategy wasn't built to win headlines. It was designed to withstand the storms. Inflation, recessions, bull runs, crashes. It's prepared for all of them. This isn't about guessing right. It's about building a system that doesn't care if you're wrong. It's not about glory. It's about resilience. When everyone else is panicking, this portfolio holds the line. That's power, and it's available to anyone who chooses discipline over dopamine. Imagine the market as a war zone. You don't know where the next missile will land, but you can wear armor. The all-weather portfolio is that armor. It won't make you invincible, but it will keep you alive. And in today's environment, survival is underrated. While others gamble on perfect timing, you prepare for chaos. And in the long run, preparation always beats prediction. The financial fortress, decoding every layer of armor. This portfolio isn't theory, it's architecture. 30% goes into US stocks, your growth engine. But that's just one part. 40% goes into long-term bonds, your shock absorbers when markets collapse. 15% goes into intermediate-term bonds, the stabilizer bar to reduce wild swings. These pieces aren't just allocations, they're strategic reinforcements, built not to maximize gains, but to prevent collapse. This isn't diversification for decoration, it's designed for survival. Now comes the armor. 7.5% goes to gold, the shield against inflation's slow poison. When cash loses value, gold holds strong. Another 7.5% goes to broad commodities, your economic battalion when prices surge. Together, these act as insurance for your portfolio. Not to make you rich, but to stop you from being destroyed. That's the point most miss. They chase returns. You build defense. You don't need to know what happens next. You need a system that's unshaken no matter what comes. That's what this is. A calm, structured machine that doesn't panic when headlines scream. It won't outshine flashy portfolios in good times, but it'll still be standing when the chaos hits. And in today's market, that's more valuable than any short-term gain. Because the real victory is not going broke while everyone else burns. The performance battle, all-weather versus S&P 500. Let's strip away theory and look at the battlefield. In 2008, when the market fell nearly 40%, the all-weather strategy dropped less than 4%. While others watched their portfolios vanish, this one held like a bunker. It wasn't about victory, it was about survival. In investing, staying alive is the highest form of success. You don't need miracles. You need a strategy that doesn't crumble when the world burns. And this one didn't even flinch. From 2011 to 2020, the S&P soared with over 13% annual gains. The all-weather strategy delivered about 7.5%. Not exciting, not headline-worthy, but it was stable, consistent, and most importantly, sane. While others chased highs, this strategy preserved peace of mind. It's the difference between riding a rocket and piloting a tank. One is faster, the other survives the crash. In the long run, resilience wins more than adrenaline. Everyone loves big returns, but the real question is, what did you risk to get them? The all-weather portfolio offers higher risk-adjusted returns. It rewards emotional discipline. It doesn't dazzle, it defends. It's not built for hype, it's built for staying power. In a market addicted to what's next, this strategy whispers, what lasts? And if you listen, it just might protect you when everything else falls apart. Investor psychology. Who should play this game? No single strategy fits all. What works for a 25-year-old won't work for someone approaching retirement. Younger investors may tolerate volatility, but if the thought of losing 30% overnight makes your stomach churn, growth isn't your priority. Structure is. Investment isn't just about what you want, it's about what you can handle. Your emotional bandwidth is the real asset. Ignore it, and your portfolio becomes a panic button, not a tool for freedom. This is where the philosophies diverge. The S&P mindset chases acceleration. It's thrilling, aggressive, and punishing. The all-weather mindset accepts limits and builds armor. One is a roller coaster, the other a fortress. Both have purpose, but pretending they're interchangeable leads to disaster. You're not weak for choosing safety. You're smart for knowing what you need to sleep at night. That's the difference between hype and wisdom. The real question isn't which strategy is better. It's which one you can hold for 20 years without losing your mind. Even the best system fails if you bail at the first dip. If your portfolio gives you anxiety, you won't stick with it. And if you can't stick with it, you won't win. Long-term wealth isn't built by intelligence alone. It's built by emotional resilience. Know yourself first. Then choose your strategy. Build your own financial fortress. You don't need Wall Street to protect your wealth. You just need the right structure. A simple version of the all-weather strategy uses ETFs, VTI or SPY for stocks, TLT for long-term bonds, IEF for intermediate bonds, GLD or IAU for gold, DBC for commodities. This isn't complex. It's deliberate. It's architecture, not speculation. And it works. Not because it predicts the future, but because it's built to survive what others fear the most. Maintaining the portfolio is simple. Keep your allocations steady, rebalance once a year. Automate it if possible. No guessing, no emotional trades, just cold, disciplined execution. This isn't about beating the market every quarter. It's about staying in the game when others are wiped out. The simplest systems often outperform because they don't rely on brilliance. They rely on consistency. And that's what truly compounds over time. Investing should feel like building a bunker, not riding a rocket. You're not here to impress anyone. You're here to preserve what you've worked your whole life for. Markets will fall, crises will come, but if your structure is sound, you won't need to react. You'll absorb the blow and keep moving forward. That's not passive investing, it's strategic survival. And that's the mindset of someone who's in this to win long term. History is a warning bell. History doesn't repeat, but it screams. In 1973, inflation surged, oil prices spiked, and the stock market crashed nearly 50%. Millions lost everything, not because they made bad bets, but because they had no defense. No gold, no commodities, no bonds, just blind faith in stocks. They entered a financial war zone with nothing but hope. And hope, unarmed, is what gets slaughtered first. That's the moment defense stopped being optional and became survival. That disaster gave birth to the all-weather philosophy. Not from ambition, but from necessity. Investors realize something brutal. The market doesn't care about your optimism. If you're not protected, it will eat you alive. One crash can erase decades, and if your strategy can't handle that, it's not a strategy. It's a death sentence in disguise. Defense isn't weakness. It's the ultimate show of strength in an unpredictable world. Yet newer generations ignore that warning. They think history is irrelevant. They believe they're smarter, different, immune. But the market humbles everyone. And those who skip the lesson will pay the price, with blood, not theory. If you haven't built defense into your plan, you're not investing. You're fueling your own collapse. When the storm comes, and it always does, you'll wish you had armor instead of just ambition. The smart hybrid, growth meets defense. You don't have to pick sides. Growth and protection can coexist. A hybrid strategy combines both, like 70% in broad market stocks, 30% in defensive assets, or 50-50 if you're more cautious. There's no perfect formula, but there's a clear principle. Don't go all in on excitement. Build a system you can live with. Diversification isn't decoration, it's survival. And survival beats performance when the market turns vicious. Too many investors build portfolios like a TikTok buffet, piling on whatever's trendy, ignoring their limits, and hoping for magic. But investing isn't a game. It's architecture. If your system isn't built on purpose, it's built for collapse. A strategy is only as strong as its alignment with your reality. You don't need genius. You need something that doesn't implode when tested. That's real strength. Your money is more than numbers. It's time, energy, sacrifice. Why gamble it on hype? Build a portfolio that fits your psychology, your goals, and your life. You won't be perfect. You don't have to be. But if you have a system that protects you when others panic, you've already won. Don't aim to predict the next boom. Aim to never be destroyed by the next bust. That's how real wealth survives. You've now seen two investment worlds, one fueled by blind growth, the other armored for survival. The market doesn't care which you choose. It punishes the unprepared. Investing is no longer about how much you gain. but how much you keep when chaos arrives. Don't cling to a strategy because it's familiar. Choose what helps you survive the next storm. This isn't a game of luck, it's a financial war. And now you hold the weapon. The only question left is, do you have the courage to use it?